session two well-known people in our community. One is Eric Dusenbury, who is from MSHDA. He's their chief educational person for home ownership as well as business. And then we have Rrok Koleci, or Rocky, as he is fondly called. Rocky is the broker owner from RK Real Estate. Apparently he knows more about HUD properties and REOs than HUD does. I looked him up, and oh my goodness, he's got all of the short sale HUD certifications that there are, and is very knowledgeable. So, is Eric here? Oh, I didn't recognize you, Eric. I always see you in a suit and tie. So how, if you guys would like to come down here rather than walking all the way up and down, it would be great. It would be great if we had some chairs that they could face the audience.
There's a hanger. Gentlemen,
I always have to sit on stage.
No, you want to stand? Okay, would you like to start out, Eric?
Absolutely, thank you, appreciate that. So yeah, MSHDA, go over a little bit about what we are, how we work, a little bit about our programs, and then ultimately how to use them. Sure, that'd be great. I did bring a little bit of literature. First of all, MSHDA is an HFA, Housing Finance Agency. Okay, each state has a HFA that is set up typically to make sure people get affordable lending options for their home purchases. They have down payment assistance typically that's available, and then also federal tax credits that can work when you're purchasing a home too. So how we typically do that, each state is a little bit different. Michigan still sells municipal bonds to finance their mortgage products. So we always have a continual supply of money for our programs out there. A lot of people don't really know this about MSHDA, but you can do non-down payment assistance financing. That is, a standard conventional FHA, VA, or RD loan without down payment assistance. So a lot of people kind of peg MSHDA as, if you don't have money, look at MSHDA financing options that are available because of our down payment assistance. When in reality, we do have limitations with MSHDA. We have income limits that come into play, and you have to be under an income limit. We have a purchase price limitation that you have to be under 224.5 and below. So there's some of those things kind of built in as restrictions, in essence, to the financing that we offer. But if it's under our purchase price limit of 224.5, and even if you're putting 10%, 20%, whatever the number is down, you might be able to get more favorable financing options with MSHDA. We've all heard about the rates skyrocketing over the last 6 months or so. And that's having a negative impact on purchasers, obviously, on the amount that they can afford. Our rate right now on a standard mortgage is about % less than the market with interest rates. So we've seen a big uptick in interest in just standard financing, 5, 10, 20% down on a conventional mortgage, for example. We also have more favorable MI terms, mortgage insurance terms, as a state entity. The rates on the mortgage insurance is less. So that's one of the things where with MSHDA, people don't really think about, hey, I want to buy a house, I have my down payment. Rarely do they consider MSHDA as an option. So, when I go out and talk to people, I tell them to think about MSHDA when it's under our purchase price limit of 224.5, because you might be able to get better interest rates, more favorable MI options. That means you can afford more of a house. We do restrict our closing costs to some extent, so they're always set and fixed. They may be less than the market too. So there's certain times out there where you kind of might think MSHDA might not be a good option, but in reality, it can be a very good option to do. So that's part of it. We also have down payment assistance. The agencies out there, Fannie, Freddie, HUD, VA, RD, They all have guidelines built in for second.
And so years ago, I did an MCC, which helped a single mom be able to afford a particular home. So it's still out there. I'm glad to hear that. And people are using it. And Rocky, you're on.
Alrighty then. Hello everyone. As far as HUD houses, really, I'm not sure how many actual buyers, first-time home buyers are here today. Is anybody interested to know a little bit about that, or is more about real estate side? So if we had the first-time home buyers here today, actually, they could have gained a lot of information how to find a HUD house, or what is a HUD house. Some people, they get a little confused. They think actually it is a completely different process. And I'm not talking about just an average buyer, but it's the realtors, brokers. Sometimes they get a little scared when they see a HUD house. Oh, I don't know, it's a little too much. Actually, it is a very simple process. The best part is, it's the same process any other transaction, even if it's just a basic transaction. Just understanding of how the HUD house becomes a HUD house, and I hope you guys understand my broken English a little bit, is FHA, which you heard it a lot today, Federal Housing Administration. It's actually an insurance to a loan which is backed by government. So you can get a property to a certain lender, but if it's FHA loan, and I'm not here to preach to lenders, they will know this better than me, but it's insured. If it's FHA insured, meaning it's backed by a government. So if the buyer purchased the property, he end up defaulting on the loan for one reason or another, not able to make the payments, then the lender who actually have the loan insured by FHA will approach the insurance and tell them, same as if we have a claim in a house or anything else with the house insurance or cars, they'll say, hey, the buyer is not paying me. So right now what FHA does as an insurance, takes that property, compares it with all the expenses already or payment made by that buyer, then they end up taking ownership of the property, then resell it again to make sure they cover their losses. Sometimes they end up making more money, sometimes they accept the loss as it comes along. So basically to understand is HUD property becomes HUD property, which is government owned backed insurance, due to kind of the buyer defaulting on it. So when this property gets available again, it doesn't mean really it's going to be for sale right away. It's a process they have to go through. So HUD, they have their asset management, and usually for Michigan, I mean, they're all in different states. Every year they do change, or every other year, depends on the contract with actual HUD. So to make the process simple is, to be a local listed broker for HUD, you actually have to apply to this asset management companies. And some realtors, they apply, or brokers, you have to be a principal broker in order to have a name. Name is name and identification address. But if you really like to know, since we got a lot of realtors here, like to know how to become a local listing broker or a realtor for HUD, actually you can attend in a training we're going to have next May 8th and at the board. So there we're going to give a little bit more information out how to really become a local listed broker if you are interested to do so. As a buyer standpoint, you have to understand the only way you can purchase a HUD property, you must have a realtor. It's not like the other bank houses where they have actually different auction programs, all different way of platforms. As a buyer, you can bid directly on it. When it comes to if the property is HUD property, you must have a representation of a realtor. And that realtor must be by a principal broker who actually is authorized to sell HUDs, which means have the name. NAID stands for name and identification address. Only principal group. What's that? NAID, yeah. Its name and identification address stands for. So to apply for an aid or to, actually the best way to start when it comes to.
I've been working on, and when I was president, I was happy to see this. Our lobbyists finally got it through. It's the Michigan First Time Homebuyer Savings Account. You can go to have, you can save money for other people, you can save money for yourself. So you can scan the code, pick up one of these if you haven't. If there's a loved one that you want to help them buy their first home, this is a good way to start, and it's tax deductible to whoever is giving the money. Thank you so much to our two speakers.